and welcome. You are watching Focus On with myself, Palesa Mufokeng. Trade in Africa has grown modestly in recent decades, expanding from 49% of GDP in 2000 to 53% by 2019. Now, this according to the International Monetary Fund's report on trade integration in Africa. Now, joining me now to discuss some of the challenges within trade on the continent is Philip Myburg, who is the head of trade for business and commercial banking over at Standard Bank. Philip, thank you so much for your time and welcome to the show. Now, I believe you have been in attendance of the CIIE, AGOA, and now recently the IATF. Perhaps take us through some of the consistent themes you have identified, especially where strategies for growing exports to Africa is concerned.
Yeah, thanks, Palesa. Thanks for having me. It's been a busy 3 weeks. We've kicked it off with AGOA, which of course is the Africa Growth and Opportunity Act. Very much an act of Congress from the US to support sub-Saharan African countries and driving trade with the US specifically. From there, we were off to Shanghai for the China International Import Expo, which is the largest expo of its kind in the world, very much aimed at China, looking to import more from the rest of the world. And from there, we were straight to Cairo for the Intra-Africa Trade Fair with obviously the full emphasis on how we can get better at trading more within Africa and with each other. There were certainly some consistent themes. I think one of the ones that stood out for me was overwhelmingly still that there's still a lot of opportunity. We often get sort of overwhelmed by some of the more negative aspects in the news. There's still a very, very significant amount of opportunity across multiple sectors and segments for Africa that can help us diversify our economies and grow our continent. And one of the other themes, of course, is that we still have a significant capacity challenge. So although there is an opportunity and there's demand for our products, and some of our products are indeed world-class, there's certainly a capacity challenge. We still need a lot of work on the industrialization front, a lot of emphasis on how we can add more value to the raw minerals and commodities that we have on the continent. And then in terms of sector specific, I think the sector that dominates probably most across all three of these events was certainly agriculture. I think agriculture for us as a continent is certainly an opportunity in which we can do more to export the raw commodities that we have, but certainly do more to add more value to these products, which certainly can be world-class in the agricultural segment.
And now, Philip, what would you say sets these forums apart, and how do these factors perhaps contribute to making one more appealing over the others?
Yeah, that's a tricky one. I mean, obviously there's a geographic difference, with the one being very much sub-Saharan Africa with US focus, the other one being China with the rest of the world focus, and then the intra-Africa focus. So geographically, that will always mean that there's some obvious differences in the way that these things are approached. The CIIE being just so significant in scale and being aimed at the whole world was certainly a standout. For me, is the fact that they just, in typical Chinese fashion, just go at a very, very large scale. There was 3,500 exhibitors, over 4 million visitors, 400,000 registered buyers. It was absolutely incredible. And what stood out there was how small Africa really is in the context of the rest of the world. It is certainly a reality check for us as Africans when you visit these big events and you just see to what a significant extent our large competitors across South America, Southeast Asia, Eastern Europe show up to these events, how much money they invest, how much resources the individual countries invest in positioning their countries and their products into the lucrative Chinese market. So that certainly stood out for me as a counter to perhaps AGOA and Intra-Africa Trade Fair, which is a lot more smaller. It was very much focused on Africa, and at times, unfortunately, not nearly as well organized as some of the things that the Chinese organize. And then perhaps what was also interesting was the different elements of the geopolitical undertones that also creep into these things. To what extent trade is used in the political sphere, that was approached in very different ways, considering the different sort of cultures that you come across in the intra-Africa context versus the US context, versus the Chinese context, of course. But back to the opportunity, I think just Africa is in attempting to be a marketplace in the context of the African Continental Free Trade Area is certainly a theme that was also consistent across all three of these, ensuring that we can certainly be stronger together at getting more from these opportunities in these key trade corridors.
Interesting takeaways there. Now that we've mapped out the number of trade forums centered on bolstering African economies, let's zero in on agriculture. I mean, it is a bedrock and the greatest employer within African markets and industrialization. How can a strategic approach be employed to enhance such opportunities in Africa?
I think at the core of that answer probably sits the AFCFTA. And the reason why I say that is the AFCFTA, as we know, is driving a lot of alleviation and friction points around trade in the continent. So that means movement of goods, movements of services, movement of people. Why is that important? It's important for us because so many of our markets are not significant or large enough in its current capacity to meet some of the demands if we want to really make trade in agriculture a key contributor to these economies. If we can create regional value chains, it will make it much easier to create these capacity across various regions. It will make it much easier for skills to move across the continent. It will make certainly for infrastructure enhancements. We saw on the recent Standard Bank Africa Trade Barometer that surveyed over 10,000 businesses across the continent that infrastructure remains the number one challenge in trade. It's just incredibly hard for supply chains to work effectively across the continent. So the moment the AFCFTA starts getting momentum, which in certain pockets it is, across key components like infrastructure, like moving people across the continent, that will already start making it much more appealing to create much better capacity in the agricultural space. And then, of course, from a policy perspective, we've got to create more predictability and certainty in our respective environments from a government perspective to make it more appealing from a foreign direct investment side of things. We do need foreign capital to invest into these businesses and into these value chains to meet that capacity ambition and industrialization ambition that we have.
Sure. Now, when we look at the challenges faced across the CIIE, AGOA, and the IATF, what is the central theme or the challenge, and how does this affect potential actions?
I think the answer comes back to the previous point that I made around capacity, Palesa, to be honest with you. It's consistent that when you're at CIIE, you're talking to the buyers, they're very interested in African products. We've got unique products, we've got world-class products, but often when you're sitting down into a negotiation, ultimately there's just not enough capacity from these respective sellers and producers on the continent. So that remains a key challenge. It remains a key challenge and extremely expensive to get goods from wherever it's getting produced in Africa to a factory or all the way into the ultimate market, whether it be China, whether it be the US, whether it just means moving goods from the south of Africa to the east or to the west of Africa. It's a significant challenge that just continues to be a key theme of discussion, but practically on a day-to-day basis, real challenges. It's heartbreaking to hear the stories of goods going off at border crossings, businesses deciding to rather export to other markets as opposed to the rest of Africa because of the infrastructure challenges, etc. So to me, that certainly remains a consistent theme, both in these high-level discussions, the day-to-day negotiations with businesses, and the actual trade that's happening on the continent.
Now, I want us to talk about some of the work that Standard Bank does. How do you position yourself to align with sectors such as agriculture and industrialization?
Yeah, we do a lot, Palesa. I mean, the footprint that we have on the continent, in 20 African markets, the capital base that we have, the resources that we have, it's not just an opportunity, it's also a responsibility for us to play a role in that. So we do a lot in supporting these forums from a sponsorship perspective. We create these platforms to bring policymakers and private sector together to have the important discussions that are required to move the policy forward. It also brings private sector together to trade more, to negotiate deals, to grow their networks. One of the best things about Standard Bank is the fact that we've got this broad network, and it's our responsibility to have clients and businesses across the continent leverage that network. And then, of course, we do things that banks do. We finance trade. We support businesses from a working capital perspective. We co-invest with businesses from a capital expenditure perspective. And then, as the trade barometer is a lovely example of things that we do more than just banking. We know that access to information on the continent remains a significant challenge to trade generally, and therefore we launched the Africa Trade Barometer. So we continue to do these things both in the traditional banking space as well as the non-traditional banking space to really play our part in growing trade on the continent and then ultimately diversifying these economies, which is so much needed.
Philip, beyond aligning legislation and reducing red tape, what else can be done to strengthen Africa's private sector to develop the manufacturing capabilities and the capacity that you talk about to beneficiate products and produce finished goods?
Well, yes, unfortunately, there's no silver bullet to these things. It's a very complex environment to solve, but it'll take a multi-pronged approach over several decades. As we know, as an example, I did mention that the success of the AFCFTA is one of those factors that we will need to improve the trade on the continent. We have to be realistic. The EU took over 40 years to get into play into what we know and what we often reference as a success factor, or what the AFCFTA is aiming to do. And that's just one example. We're dealing with a very complex environment. Of course, there are things that are slightly lower hanging fruit. There's more that we can do around practical elements of moving goods and services and people across borders. There's more that we can do as a financial sector, for instance, to support businesses from a working capital and from a capital expenditure perspective. There's more that we can do from an inclusivity perspective. But of course, every sector will have to play its role, whether it's the agricultural sector lifting its standards, bringing in the necessary skills and expertise to ensure that our products remain or become world-class where required and meet the necessary requirements to trade on a global scale. Whether it's government doing its bit to create that predictability, we'll need every single player across the value chain to really put action to these words. One of the things that often is deeply frustrating in attending some of these panel discussions in some of these events like AGOA and the IATF is that often everyone knows the answer, but no one's actually doing anything about it, or the action is it's certainly not taking enough. And that's something that we certainly trying to do as much as we can from a Standard Bank perspective.
Sure. Philip, there's so much to unpack and lots to talk about, but I've been told that we've run out of time, so unfortunately that's where we have to park our conversation for today. That's how we wrap up today's conversation. Thank you to my guest, Philip Myburgh, who is the Head of Trade for Business and Commercial Banking at Standard Bank. Thank you so much for joining me. But from myself, Balisa Mufokeng, and the team, it's goodbye for now.